Good day, you're watching Businessworld Live here on One News. I'm Jes Delos Santos and here are today's top stories. Economists expect rapid recovery to continue this year despite a projected slowdown in the second quarter. The government plans to build new airports in the provinces. And how will the highly controversial visit of U.S. House Speaker Nancy Pelosi to Taiwan affect the Philippines? An expert says it is a litmus test of our government's foreign policy. And we're still in the thick of corporate earnings season. Metro Pacific reports higher core profit in the first half. The Pangilinan-led conglomerates now eyes investments on priority sectors identified by President Bongbong Marcos. Let's begin our broadcast with the local economy expected to continue its rapid recovery this year despite some headwinds. Economists from FMIC and UA&P expects GDP to expand by 6 to 7% this year. This despite seeing growth slightly easing starting in the second quarter. They say more robust economic data like higher employment, exports, and OFW remittances should support this growth view. Still, this projection is still lower than the 6.5 to 7.5 GDP target set by economic managers for 2022. The PSA will release second quarter GDP data on August 9. Now, on the flip side, the PSA says the country is lagging on growth and poverty targets this year. Based on the PSA's 2021 Statistical Indicators or StatDev report, the government is likely to achieve only about 57% of its target under the Philippine Development Plan for 2022. Among the industry sectors that showed high likelihood of achieving their targets are shelter and housing, competitiveness, science and technology, and environment. However, the report showed that the government isn't likely to meet targets for social protection, infrastructure, demographic dividend, and justice. Now, Felix Mining raised over 2.6 billion pesos in a stock rights offering that markets listing on the local bourse. The mining company will use the funds raised from the offering to pay for mine development, construction of a mill plant, and storage facilities. Felix offered one right share for every 5.8 common shares held by shareholders as of June 29. The shares were priced at 3 pesos and 15 centavos apiece. Meanwhile, the PSE has greenlit the 3.3 billion peso SRO of Solar Philippines Nueva Ecija Corp or SPNEC. The offering consists of 1.9 billion shares to be offered starting August 30 at a target price of up to 1 peso and 76 centavos per share. Now, SM Investments recorded a nearly 27% increase in consolidated net income that amounts to 25.5 billion pesos in the first half of the year. That's on the back of strong consumer spending amid eased mobility restrictions. The company's consolidated revenues also rose in the first half by 23% compared to the same period last year. SM Retail reported over 163 billion pesos in revenue, that's up by 18%. BDO delivered nearly 24 billion pesos in net income, up by 12%. China Bank posted a 39% jump on revenues, while SM Prime saw a 21% increase in its consolidated net income in the first half of 2022. Now, on the back of that report, SM Malls continues to pick up steam as revenue doubles in the first part of the year. Will that trend continue despite the global economic slowdown? Let's ask SM Supermalls President Steven Tan. Steven, good day. Thank you for joining us.
Good morning, Jess. Nice to be here.
Okay. Picking up from that report, you have revenue of SM Prime's mall business skyrocketing 92% in the first half. That's 20.6 billion pesos. This is quarantine restrictions ease. Is this a sign that things have returned to pre-pandemic levels for SM Malls, and do you see the malls unit sustaining these gains for the remainder of the year?
Okay, we have been monitoring, especially with the last 2 months, because of course, the rising costs, inflation, fuel, cost of fuel, but we have seen great numbers still in terms of sales and revenue even last July. No, we've just closed a few days ago our numbers, and we're quite confident that this will continue despite all the challenges that we are facing.
But more on that as well, do you expect the operation of their mall tenants to be affected, especially considering the elevated levels of inflation, especially in the first half? Your mall rental income surged by as much as 80%. Do you expect that still to continue?
Yes, we are still very confident about the sales or the business of our tenants because, well, we have a lot of OFW remittances is still very strong. And as a matter of, but more than anything, I think SM Supermalls really, this is really not a, it's perceived as a place for value for shopping or value for your money.
But did you at least experience some tenants closing shop during the period, especially June, July, when inflation was at an all-time high?
As a matter of fact, no, we grew. We grew, June, we grew 2 percent points. And this July, we just closed, and we improved another 1 percent point.
Now, also, we did see reports of SMO saying that, you are going to let go of concessions that were put in place during the pandemic. By how much do you see this as well affecting your take-up in the mall space? And do you see this also bumping up rental income?
As a matter, last year, we were giving rental concessions really until December. This year, we've slowly lifted it up, and we are already in full swing as early as April, May. But of course, there are some isolated malls that we still have to assist our tenants. It's case-to-case basis, but there's no more rental concession across all board.
But at the same time as well, can you give us an idea on the performance of your malls here, depending on regions? Is it an improvement that you saw for the first half of the year across the board here, across all regions, or are there still some localities which are lagging behind?
Well, majority of our malls are already back to pre-pandemic level. However, there are of course some malls that still need some assistance because some LGUs also open up later than the others, no, because of the cases. It really depends on the region or the area where we are. But majority were already back to pre-pandemic level.
And that, of course, brings down our conversation to foot traffic as well. Is that also back to pre-pandemic levels? What can you say about the consumer behavior? Is this still a case of revenge spending?
Yes. Well, a lot of pent up, demand for going back to the malls. No, we see that since the easing of restrictions for minors and also for age over 65, that has really helped improve our malls. And besides, there's a lot of new activations that we have been doing. There's a lot of efforts from the side of the malls. Creating activation, magical experiences, and all these things that really led this growth. Now, I think people are excited also to get together with their friends and loved ones.
Now, during the course of the pandemic, SM has had a stronger online push here to cope, of course, with the changes in behavior among consumers. But now that the economy is reopening and consumers are returning to malls, how will this impact your online push?
There is no turning back now. I think the way to go for the future is also omni-channel. At the end of this, it's the consumer who will win because it's really whatever they want, however they want it, we'll provide it.
Do you see as well the president's push to tax digital services affecting your entry or at least your expansion in the digital landscape?
Not really, because what we're trying to do here is really to assist more the tenants. No? So whatever that they sell online is recorded in the brick and mortar stores. No? So we don't think so because all of our online tenants are also present in the brick and mortar stores.
All right. Now, also in our past conversation, Steven, you mentioned how you do not expect cinemas to be revenue generating, at least during that period wherein cinemas were starting to reopen. Is that still the case now?
We are very surprised that it got back earlier than what we expected. We are already on a positive, we have positive numbers as early as May. Well, it's also because of all the big Hollywood movies, the likes of Thor, Doctor Strange, and for the whole balance of the year, we expect a lot of good Hollywood big blockbuster movies still. No, the likes of Avatar will launch, and MMFF. I saw the lineup of MMFF. It's quite encouraging.
By positive numbers, can you give us more details on that? And do you also expect somehow, since we're seeing a surge in cases yet again, do you see that affecting the numbers of SM cinemas as well?
No, because recently Thor has given us great numbers as well. It's actually higher, especially that it's not only the cinema that we have in our malls. No, we have the ice skating rinks, we have the bowling. Those are even doing better than 2019 numbers. We have exceeded actually the numbers by double digits with our ice skating rink and bowling centers, or all our fun and entertainment rides. However, in the case of cinema, we have seen growth, and the numbers are positive, but yet it's approximately around 80% pre-pandemic level.
80% pre-pandemic level. We're expecting, of course, those numbers to go higher, especially approaching the last quarter of the year. Now, what's in the pipeline here for SM Malls? Any new mall openings for the remainder of the year all the way to 2023?
Yes, we're very confident. We first half we opened SM City Rojas. The second half of the year we have SM City Tanza Cavite, Tuguegarao, and also Sorsogon lined up. Now this will open at the last quarter of the year.
Now, pre-pandemic, I mean, SM has been a very bullish when it comes to international expansion. Are we expecting more?
Yes, we will be opening SM Xiamen Phase 3 this December, and also another mall in Yangzhou Province. So there are two lined up for the year.
Are geopolitical tensions going to be a concern here, especially when we're talking about your locations in China?
No, I don't think so, because in China, the local consumption is very, very strong, and the support of the government to the private sector is also very strong.
All right, thank you very much again for your insights and those details. Again, Steven Tan, President of SM Supermalls. Thank you, Steven.
Thank you.
Now let's pause for a quick break, but coming right up after that. Pangilinan-led conglomerate MPIC eyes investments in key sectors identified by President Marcos Jr., such as agriculture and nuclear energy. More of that and other stories when Businessworld Live returns. Stay with us. you're still watching Businessworld Live here on One News. I'm Jes Delos Santos. While U.S. House Speaker Nancy Pelosi has already left Taiwan, experts warn that her visit to the island may strain relations between Washington and Beijing. China earlier condemned Pelosi's visit and called it a threat to the peace and stability in the Taiwan Strait. Beijing's foreign ministry added that Pelosi's visit severely impacts the political foundations of the U.S.-China relations and that they would punish those who would offend them.
As we can see, such a visit is apparently very much dangerous, very much provocative. Such a visit undermines the One China principle, undermines China's sovereignty and territorial integrity.
Meanwhile, in an interview with The Big Story, security analyst Chester Cabaza also warned that the tensions between Taiwan and China could put the Philippines in a difficult position. Cabaza calls the visit a litmus test of the government's foreign policy.
We have to understand also that we have a national interest in Taiwan. Taiwan hosts a number of thousands of overseas Filipino workers there, and Taiwan just sits, of course, above the Philippines. Now, in case there will be reunification, or the second scenario would be a first retake of Taiwan from China, then definitely Manila or the Philippines will become an automatic buffer zone.
The Transportation Department says it is looking to develop more provincial airports. Transport Undersecretary TJ Batan says the Marcos administration wants new airports in Zamboanga, Dumaguete, Masbate, and Bukidnon. He also says the administration will ensure continuity of ongoing airport projects, especially San Miguel's New Manila International Airport in Bulacan. Transport Secretary Jaime Bautista earlier said the agency aims to, quote, transform the Philippine transport industry and elevate it to global standards. Finance Chief Ben Jokno urges local miners to follow responsible and sustainable practices. Jokno said mining companies have the potential to be a key driver for long-term growth in the Philippines. He says mining is a strong magnet for foreign investments, which could propel the Philippines to a higher growth trajectory. Jokno added that the administration is committed to empowering the mining industry in exchange for the industry players observing responsible mining. Metro Pacific Investments Corporation has reported higher core income in the first 6 months of the year. The Pangilinan-led conglomerate is now setting its sights on priority sectors identified by President Ferdinand Marcos Jr., such as agriculture and nuclear energy. Shaila Francisco with the rest of the story.
With industries ramping up their operations on the back of further reopening of the economy, improved toll road traffic and increase in power consumption boosted Metro Pacific Investments Corporation's earnings in the first semester of 2022. Its core net income in the January to June period rose 24% to 7.5 billion pesos. Broken down per segment, Meralco's core income for the first 6 months jumped by 15%, while the core profit of its toll arm, Metro Pacific Tollways Corp, increased by 33%. For the water segment, Maynilad recorded a 1% drop in its net core income, while Light Rail Manila Corp, which operates LRT1, recorded a core net loss of 329 million pesos. Even with the threat of a new COVID variant, MPIC is confident its full-year performance will exceed 2021's figure of 12.3 billion pesos.
Actually, the major companies under the MPIC group are doing reasonably well. For the second half, starting July and the first few days of August are looking positive for Metro Pacific. For the full year, we'll definitely be ahead of last year, and I would hope that the 2022 numbers for the full year would at least approach what we accomplished in 2019 pre-pandemic, no? Which was slightly above 15 billion core income.
Moving Moving forward, the conglomerate is also keen on investing on priority sectors identified by President Bongbong Marcos during his first State of the Nation address. For one, MPIC is considering expanding its dairy product business while setting its sights on new investments in rice, corn, coconut, and vegetables. Recall that MPIC recently acquired a major stake in dairy company Carmen's Best.
But we're starting to realize how much dependence we have on imported food and of course imported fuel. No? So to the extent that we can achieve a modicum of independence in our food supply, I think that's something that's very important to us, and I think for the country. It's not something that I think the president appreciates himself. No? So based on his honors.
As for energy security, MPIC continues to be open to the possibility of harnessing nuclear energy in the country.
We are seriously studying the various technologies developing today, especially in the area of small nuclear reactors, modular reactors, which I think is best suited for the country rather than the conventional monolithic type of nuclear power plant.
Tollways remain promising to the Pangilinan-led group. They are now eyeing a possible IPO for MPTC by the second half of 2023, ahead of Metro Pacific Hospitals and Maynilad. With airports, MPIC is not keen on submitting an alternate bid on the Swiss challenge for the Sangli Airport.
To say we're not yet looking at it.
Not yet.
I'm personally interested in because I think it's a good collateral project for NAIA. Because I think the runway is capable of being fixed and expanded, and it's a parallel runway to NAIA. And in the long run, it could be a replacement airport for NAIA.
MPIC says it will also set its sights on potential growth areas in tourism and water. Shaila Francisco, We Are One News.
And those are the biggest stories on the economic and corporate front today. I'm Jes Delos Santos. We Are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us. You're still watching Businessworld Live here on One News. I'm Jes Delos Santos. Now, as tensions continue to brew between the U.S. and China over the Pelosi visit in Taiwan, the peso on Wednesday led declines among emerging Asian currencies as risk appetite wanes. Looking at the peso now, it's been swinging between gains and losses earlier in the day, but as you can see right now, looking flattish here at 55.74 to the greenback. Now, of course, adding concerns here, you have the central bank hinting that inflation may have peaked last month. Traders now trying to balance moderate price gains on the interest rate path over at the equity space. Let's have a quick check of how the index is doing so far. As you can see, gaining 0.3% here, extending the rally that we saw on Wednesday, joining the rest of Asian stocks, making gains on the early trade here this Thursday. Again, Wednesday saw stocks jump as investors turned away from Wall Street following Pelosi's visit to Taiwan, as it could further strain U.S.-China relations. That at least is according to Luis Limlingan of Regina Capital. Again, Fed rate hike slowdown also boosting sentiment here among emerging markets. Earning reports at the same time still a catalyst here for the rally that we're seeing right now. You have yesterday, again, like what we reported earlier, Metro Pacific's core income growing by 24% in the first half. Looking at Metro Pacific at the moment, you can see the stock gaining 0.8% to 3 pesos and 67 centavos a piece. Let's see how the Pangilinan conglomerate is faring compared to the rest of our leaders and laggards here. Let's have a quick refresh. Quickly refresh this chart right here. Security Bank still a leading gainers here, up 2.5%. Pure Gold likewise up by over 2%. On the flip side, however, you have JG Summit, biggest loser so far, down by 1.4%. Converge likewise in the red. A number of earnings reports still to be expected today. You have Robinsons Retail, PLDT, ICTSI, and San Miguel. Will try to keep tabs on those figures, of course. And then at the same time, let's move on to another Pangilinan stock here, particularly Philex. That's after the Finance Department said that it may collect as much as 8.5 billion pesos in excise taxes from the mine life of Philex Mining Silangan Copper Gold Mine project. According to Secretary Ben Jokno, the mining sector holds the greatest potential to help boost economic recovery and long-term growth. Philex again just raised 2.65 billion pesos in stock rights offer to help get the ball rolling on the Silangan project by the first quarter of 2025. However, as you can see right here, investors selling Philex stocks here. The Philex is down by 0.3%, now at 3 pesos and 15 centavos a piece. Lastly, let's have a quick check here of our flag carrier, Philippine Airlines. The flag carrier reporting first positive financial reports for the first half of 2022. This is the first time since 2016. Operating income is at 6.6 billion pesos. Net comprehensive income also at 4.2 billion pesos. Revenue, get this, at 58.1 billion pesos. This is passenger revenue grew by 258%, but some turbulence up ahead. You have President and COO Stanley Nang saying that there are, of course, various economic concerns here, rising inflation, higher energy costs, and again, adding all of that, adding, of course, to economic uncertainty, but they vow still to be fiscally prudent. As you can see right here, Paldo weakening a touch here, down by 0.7%, now at 5 pesos and 50 centavos a piece. And that's it for today, August 4, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jes Delos Santos. Mask on, wash hands, and stay safe. Philippines, we are One News, all sides, all the time.